This is the CEO Barbecue. My name is Antonio, and today I'll be looking for copper in Namibia together with Heye Daun, the CEO of Koryx Copper. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Koryx is listed as KRY, but with a K, so KRY, on the TSX Ventures Exchange, where over the last 3 months, an average of about 60,000 shares have traded daily. The stock's 52-week high is $1.29, and its 52-week low is 65 cents. With a market cap of just under 70 million Canadian dollars and just over 70 million shares outstanding, today this is a 98-cent stock with a 50 and a 200-day moving averages at respectively $1.05 and $1.04. There are 10.5 million warrants outstanding with a weighted average exercise price of 50 cents and a weighted average contractual life of just under 1.5 years, although some have already probably been exercised as we speak, as well as there were about 2 million options and 2.5 million RSUs outstanding, bringing the number of fully diluted shares to just under 83 million, meaning an increase of 22% in shares outstanding can be expected if all dilutive securities get exercised, which would then result in about an 18% ownership dilution if, that is always a big if, but if all those securities get exercised. Major shareholders here are some known names like Ross Beatty and some of the larger funds in our space like David Finch's Ixios and Willamette Coop's Commodity Discovery Fund, and a few others that you'd probably recognize. As well as there's a corporate shareholder in here in Tech Resources, while management owns about a fifth of the company as well, and thus leaving about half or 54% to be specific in the hands of supposed retail investors. Moving on, I'll be looking at the financial statement, the latest of which shows us the numbers as of February 28, 2025. The asset side of the balance sheet at the time held $17.5 million in current assets, most of which, $15 million to be specific, at the time was in the form of cash with some tax receivables and prepaid expenses on top of that. The liability side had in total about $950,000 on it, mostly in current liabilities and specifically mostly in the form of account payables and accrued liabilities to the tune of $780,000. And then there's about a $150,000 finance lease with First National Bank recorded on the non-current liability side of the balance sheet. Moving on to the P&L for the 6 months that ended on February 28, Koryx recorded just under $5 million in operating expenses, but not all of that was a cash expense. For example, there was about a $710,000 worth of share-based compensation, as well as some amortization on top of that, which leaves the actual out-of-pocket cost for the 6-month period at about $4.2 million, roughly 58% of which was spent on exploration and evaluation, and that's 42% on what I jokingly call bureaucracy. More specifically, that places Koryx at an average monthly G&A of about 300,000 Canadian dollars. The largest chunk of that administrative spend was payroll, consulting, and management fees combined, which again, combined, they accounted for about 44% of the overall G&A. Notably, though, very little money was spent on marketing. There's about $5,000 that was spent on shareholder information and travel combined over the last 6 months. So hopefully that's something we can touch upon later on in the conversation. And normally I'd give you two ratios here, with that being the exploration to administration ratio, which I actually already did. It's, again, more or less a 60-40 split in favor of exploration, as well as normally I'd give you the drilling to marketing ratio. But again, they barely spent any money on marketing over the last 6 months, so that ratio won't make all that much sense here. But I do encourage you to go through their full year financials yourself once they're available sometime in the near future, and look for those ratios yourself, as I am not infallible and I can be making mistakes in my reading and interpretation of these numbers. So stay on the safe side. Go look at their financials yourself on setterplus.ca. That all said, that's enough accounting for the next couple of hours at least, because we're going to Africa, and specifically it is the large-scale open-pit Haib copper project in southern Namibia that's been the focus for Koryx as of recently. Now, this is a Paleoproterozoic copper porphyry deposit, which, why I'm saying this is because it's actually important. These are rare, and Paleoproterozoic basically means very, very old rocks. The 2024 updated mineral resource estimate used a 0.25% grade and showed almost 2.7 million tons of contained copper, split about halfway between indicated and inferred, with the average grade of the indicated being 0.35% and the average grade of the inferred being 0.33%. This is not a new project, though, or a new deposit, and exploration here goes as far back as Falcon Bridge in the mid-60s, and then Rio Tinto in the mid-70s, and then most recently Teck in the mid-10s. Why they didn't move it forward is something I hope I'll be able to better understand later on in the conversation. But the main goal and topic of discussion today will be the growth of that mineral resource, which Koryx hopes to achieve by increasing the grade to a targeted 0.4 or 0.45% copper equivalent, which they estimate will require 55,000 meters of drilling to achieve, all of which planned for 2025, which by Q4 of this year, at the latest Q1 of next year, is expected to result in an updated MRE, which will then kick off their permitting application, which of course we'll discuss today as well. And then mid-2026 is when they hope to start working on a financing package for the project, which we will forward-lookingly discuss today as well. I think I just made up a word, but I like it, so I'm keeping it. And then ultimately, the plan is for early construction works to begin in H2 of 2027. All the while, early stage exploration is also going on in Zambia, where Koryx has 2 blocks of land, which they own 51% of, with an option to acquire 80%, and are under earn-in JV agreement, with drilling expected or hoped for by early next year. So again, as you can see and hear, loads to discuss here today, which means it's time for me to shut up and Heye give you the word. But first of all, thank you for sitting down with me today.
Thank you for having me. I obviously heard a lot about you, and it's great to be doing this for the first time with you.
Pleasure's of mine, and thank you for the kind words as well. There's loads to talk about here today, but let's maybe start off with the man behind the company first. Who are you, and why do you think you're the right man for the job?
So I'm a Namibian by birth. I'm a mining engineer. I've done, I've basically been on all sides of the table in the mining game. I think that's one of the unique aspects that I bring to the party. So I graduated in 94, which gives me 30 years of experience, roughly. It's scary to think of it that way, but it's good. And so I spent probably around 10 years in operations, around 10 years or so in 5 years, let's say, in finance, working for fund management institutes and in project finance for a bank in South Africa. And then the last 15 years, I've been doing what I'm doing now, which is putting companies together, promoting, creating value. Um, and that's me. So I love doing this. I'm very fortunate that I love doing what I'm doing. I've had actually quite a bit of success. I don't like bragging, but let me brag a little bit. So I've been involved in 3 successful exits that I've been personally responsible for as president or CEO.
Hmm.
First one was in 2010 when we built, basically took an asset that was well known but underestimated, improved it, acquired it, improved it, sold it with a feasibility study to B2Gold for $200 million. Then I did another one in 2016, was a turnaround situation in Ecuador. It was actually excuse my language, shit show company. It had a lot of issues. I cleaned it up, financed it, got some work going, gave it credibility. Credibility, that's a word I'm going to come back to many times. Ended up selling it to a Rosbiti company. That's how I got to know Rosbiti. That was a $200 million deal, of which ours was 70. And that company is just being sold to CMOC. It's called Lumina Gold. It's in the final stages of closing that transaction. And then I started Osino, which was a Namibian gold exploration company. Basically, flippantly, 8 years ago, we said, "Oh, we've had success here. There's a gold mine. There's one. Let's try and tie up the ground in between." It was the doldrums of the gold market. We were able to do that cheaply. We did a very credible, systematic exploration program, made a discovery, did lots of technical work, and ended up selling it to the Chinese for if you include break fees and all the other things, just under $400 million last year. So that's me. I love doing this, and now I'm just doing it again with a new asset again in Namibia. That's why I emphasized the Namibian part at the beginning of the conversation because I'm very rooted. I live in Cape Town, but I have strong family links to Namibia. I'm there constantly. I'm a mining engineer. So I think that connection to the asset is a key part of what we're doing. And of course, the Canadian capital markets have set me free in a way because they've enabled me to raise money to execute my vision. And that's what I'm doing. Sorry,
Hmm.
getting carried away here.
But you're based in Cape you live in Cape Town essentially, you said.
I live in Cape Town. I met my wife in Cape Town, but my brother is a cattle rancher in Namibia. My two siblings live there. I've got property there. I'm very deeply rooted. And actually, that also talks to doing things the right way. I'm a big believer in responsible mining and low BS, reality. I think my brand is I'm real. I'm what you see is what you get. I do what I say, what I will do. It's a very simple formula. And and as a result of that, I've built a credibility as a doer. That's a key strength.
Hmm.
I'm very good at getting stuff done, but in not over-promising and basically delivering. And it's a great brand, and every time I do it, it gets easier. So that's basically me.
Hmm.
And a big part of that is being connected, not being in Toronto or in New York or in London, but actually being connected on the ground here.
Hmm. Praat u Afrikaans?
Ek praat Afrikaans ook, glad nie 'n probleem nie. Where did you learn Afrikaans? That's amazing.
Ik spreek Vlaams.
Oh yes, of course. And that's actually more similar to Afrikaans than Dutch. People always say it's like
Yep.
Dutch. No, it's actually it's Vlaams is even more similar than. So
Yeah.
well done.
Yeah. No, we could do this in Flemish actually. That would be funny. There would be a grand total of probably three or four people understanding what we're saying. But what about your technical team? How have they worked and been successful in similar geologies before as well?
Yeah, so I think that's another key aspect of our success in the last 10 years is that I pay a lot of attention to putting the right teams together, making sure that basically I've got three rules. I'll tell you quickly what they are. Leopard doesn't change its spots, play people to their strength, and square plugs and round holes. Don't force square plugs into round holes. So I pay a lot of attention to making sure that teams work and that it's complementary strengths and that people have fun. We have a lot of fun. Most of us don't have to do this. I don't have to do this. I've had success. I've made enough money. I really don't have to do this. And but I love it. And most of the people that work with me, it's just in the same way. I've helped them. Some of them were wealthy already. I've helped them through Osino, especially. They all made good money. They don't really have to do it, but they enjoy it. They also enjoy it because we do real work. We're very active. It doesn't always come across in the press releases. But and so they're able to do what they enjoy doing. And having worked together for so long, understanding each other well, also having all these relationships like in Namibia with the regulators, permitting, getting stuff done is obviously a key part of it, and that's a big aspect of our success is this team. So yeah, that's us. I would say we are in the last company, we were a high quality exploration company that did things like a major. In fact, we did things better than the majors. The majors, for various reasons, capital budgeting and others, majors are usually not very good explorers because, and so we were a well-funded, high-quality explorer and developer, meaning we didn't build mines. We got the projects to the shovel-ready stage. That's really our sweet spot. I think that's another aspect I want to highlight is core competence. Focus on your core competence. And our core competence is identify, acquire, advance, and exit.
Hmm.
And I'm not ashamed to say this. I think juniors are not the right companies to build and operate mines, real mines, big mines. And that's why I think saying we're going to do this, identify, acquire, advance, and then ideally partner with the bigger groups, that's the way to go. That's our model, and that's what we do. And therefore our team, you asked me about the team. Our team is exploration, infrastructure, permitting, development focused, not mine building focused. If we had to, we would do it, but I don't think it's the right way.
We'll definitely talk about that business strategy of yours at some point here later on. I do want to talk about insider ownership, as I mentioned earlier, noted as about a fifth of the company. How much of that is you personally, and more importantly, how did you get those shares? Founder shares, open market, and financing buying? How did that come to be?
So I should say, obviously, when you look at me, you can imagine there are different buckets, and I've got family and friends and others
Sure.
that own significant piece, and I've got some structures. When I say that it's not me, it's not under my control or direction, but so the actual insider associated ownership is quite a bit higher than the number that you see there. The number
Hmm.
that you see is other shares that are directly in my personal name. Um, I acquired those. Basically, we did this deal. We didn't start this company. After we sold Osino for just under $400 million in September last year. And then opportunistically, we got into this one because it was in Namibia. It was advanced, it was large,
Hmm.
and it was in a broken situation. It needed a new direction. And then we came in. But what that implies is that we weren't given any founder shares. So we acquired all those shares. We were given some incentive shares, RSUs, obviously. We gave ourselves RSUs. That's how it works. Um, and that's where those shares came from. So in the last finance, to be honest, I'm prepared. I can't give you the exact numbers. I can follow up in an email. But very roughly, in the last financing we did in October, I think it was $20 million. 10% of that I bought, $2 million at $1.10. That's the
Hmm.
highest price I've paid. That's probably about half of my ownership. I bought some in the market, a couple of $100,000, which you can see. And then there were some RSUs that I got issued as an incentive.
Hmm. Well, I don't need a specific price. What I'm looking for here is free shares. I mean, if you could own 90% of the company, if you bought it for $3 total, then that might not mean they have the right incentive. So that's what I'm looking for, and that was a
Yes.
fine answer.
No, but let me say this differently. I see this as a major opportunity for me personally to make another big turn because I do think that eventually this company will be sold. And that's why I will own significantly more in the future. You will see me buying personally and in other structures that you don't see, I will continue to buy shares. I've done that before. You see in the last couple of months, I bought 400,000 shares. I will continue to buy because I think we have a major opportunity and I want to own more. And I want to become the biggest shareholder in this company. I'm not at the moment. I think Ross Beatty is. No, sorry, he's not. Tech might be. No, it's actually Mackenzie Investments. They're the biggest one. And then Tech. And then thereafter, Alan and I. But I would like to become the biggest shareholder in this company.
Well, I do see that you've been buying in the market here in your SEDI filings, rather large, at least to me, large amounts as recently as February. So that's something you plan to be doing throughout 2025. I mean, you're going to be, if you raise capital, which we'll talk about as well, but you'll participate in that. And then you're saying you also might be buying in the open market. Is that right?
I will definitely buy in the open market. The issue is that we have, as insiders or as the CEO of the company,
Yeah.
the open periods are very limited.
Hmm.
So we are open now, and you got to be careful. The signaling effects, etc. And I want to buy shares because I believe in the prospect of this company. I believe in the signaling effect of the CEO buying more shares, and so it's generally just a great investment. I found, sorry, just to quickly make this point. I used to do junior investments, shotgun approach in the past. I always thought, as a mining engineer who's been on all sides of the table, I thought I should be a brilliant junior investor. And I lost money on most of those passive portfolio investments. On a lot of them, I lost money. Some of them went to zero. I know a lot of you guys have had similar experiences. And that taught me it's very tough to do this.
Hmm.
But my best investments have been in myself because I focus on what I can control, which is execution. I can't control macro, copper price, TSX. I can't control any of that, but I can control execution. And that's why I'm very happy to take big bets on myself. And that's how I've made money. And I want to do more.
Hmm. Well, it is a good point that you make that even a mining engineer doesn't have guaranteed success here, which is something that I used to think a couple of years ago, and the market has served me a huge piece of humble pie here. But that's a different point. Do you? I don't assume this is the case since you didn't start the company, but do you or any of your colleagues personally own a royalty on any of these projects?
No, basically what happened is quickly give you that history. So no, the short answer is no. There's only one royalty. There's a stream, there's a contract in place. Namibia is unique because Namibian mining law doesn't provide for royalties. It's very difficult to enforce a royalty in Namibian mining law because a royalty has to be attached to the mining license. That just doesn't work under Namibian mining law. So you can do a stream, which is a contract. Tech has one. which is historical, and we will honor that, but we are interested in settling that at some stage. Obviously, as part of our strategy, we have to, we want to clean up all the legacy issues that were there. And but yeah, sorry, I'm going into another topic. So no, none of the insiders, no one owns a royalty or a stream except tech.
Mm.
That's it.
We'll definitely talk about that as well. We'll get to it. I've got plenty of questions here in my list, but talking about incentives again, why I'm asking about royalties because again, I want to ensure that the incentives are in the right place. How about executive compensation? How is that determined, structured? What are the KPIs? Is it share price performance related, or discovery, or something else?
So yeah, let me tell you. Not everything you're asking for is in place because we are still in the evolution of this company. And
Mm-hmm.
the evolution of this company is actually quite recent. We got involved last year initially quietly in the background because the Osino transaction hadn't closed, and then from September, after the Osino transaction closed, we came out publicly. And step one was a cleanup of the company and a reset and starting to introduce credibility. Reminding you at that stage we were actually a $5 million market cap company. We're 70 now. We did a rollback to consolidate the share structure. Then we settled a lot of legacy issues. We basically retired a whole bunch of people, brought our own team in, which includes the executives. So far, yeah, and as part of that, we restructured the board, new board members. So we have, in order to determine compensation, to answer your question, we have a compensation committee. Every TSX company needs to have one. Some people take it more seriously, others less. We do take it seriously. We get third-party advice on executive compensation. Obviously, we've been in the game. We know what people tend to earn. I can tell you that generally speaking, philosophically, we try to pay below market and incentivize above market. Um, but and that's more or less what we do. So we've given RSUs and stock options to our key employees and executives. At the moment, I don't actually get paid anything, so that's going to change. That's it's we just haven't done it yet because we've had other things to deal with. And generally speaking, I will start drawing a salary at some stage, and but we will make up through issuance of RSUs and other things. So yeah, I mentioned that point, and I saw your eyebrows raising there. You could see that as a negative. I mentioned the point because I'm emphasizing that we are so motivated by our share position. Of
Mm-hmm.
course, salary as a CEO is important, but really it's about the equity and the capital growth that really counts.
Yeah. And I like that answer. I have these the first couple of questions that we're done with now. They're fixed quite like I ask everyone those questions, but I think with you it's kind of becoming clear what you're in it for. I mean, it's clear what's driving you here. So I do like that part. And I want to talk about, you've touched upon it multiple times, but I want to talk about the history of the assets here. I want to start off obviously with your flagship in Namibia because again, it was initially discovered actually in the late 1800s, if I'm not mistaken. But Haib has also been worked since the 60s, and by, as I mentioned at the beginning, it's various large, well-financed, well-capable groups like Rio Tinto and Tech. So, what's the history of the asset, and more importantly, why didn't they move it forward?
That's the key question. So as you said there, you touched on the asset has got a great pedigree. It was in modern times, Rio Tinto sort of rediscovered it and drilled it quite intensively in the 1970s. Rio Tinto had a big uranium mine in Namibia, so they were in Namibia in any case. And they also had Palabora, which was a very big low-grade copper mine in South Africa, which was one of the most successful copper mines globally for a long time. So they had an interest. They did good work, but sort of half-hearted work in that in those days copper prices were low, the grade was low. Everybody knew about Hype. Everybody knew it's big, but it's low grade, and yeah, it will work eventually in future. That was Rio Tinto in the 70s. They then sold it. A couple of smaller companies got involved, and the only real noteworthy one eventually was Tech. And Tech also had a big presence in Namibia. They were looking for gold and other things, and they were doing exploration all over the country. So I think they kept it mostly as an option. They did some good work. They did repeated some of the metallurgical work, etc., but without being offensive towards Tech here. But it was also somewhat half-hearted. There wasn't a true intent to develop the asset. This was in the 90s and 2000s. Remember, copper prices were still low, and this was pre the climate revolution, evolution, whatever you want to call it, the climate agenda. And then, so that was it. So the project just sat there. And then something highly problematic. Well, first it got tech sold to a junior, which was okay, but that junior was called Deep South and they were unfunded and didn't really have a good plan. But then a highly problematic thing happened, which is they lost the license. Because Namibia does have this use it or lose it concept in their minerals regime, but they never really enforced it, although in the last 5 or 7 years, they increasingly have enforced it. And so Deep South lost the license. Shareholders lost money, the share price cratered. So then we got involved a year or two after, because now you had a situation where you had this asset with a good pedigree, but having pros and cons, great location, great metallurgy, but low grade. But at the same time, you had a total loss of credibility because of the loss of the license and the ownership. And that was really our opportunity. We had just sold another company, so we had money in our own pockets, and we had shareholders with a lot of money in their pockets. It was in Namibia. It was not exploration. It was a more advanced asset with a great pedigree, as you said. And it was in the wrong hands and completely mispriced $5 million company. And that's why we recognized and thought, but that was my vision, was if you apply drive, direction, experience and innovation and money, that's how you turn projects around. Far too often when juniors, this project is far too big for a junior. Juniors generally spending $1 or $2 million chasing some hits, trying to generate some high grade shoots. That doesn't work. Not on a project like this. Over here, you need to have a big integrated program. You need to run it like a major. And that's why we raised proper money. First, we got in control. We took over the board of the company. We positioned ourselves. We got the team in. We raised small amounts of money, a couple of $1 million. We got going. And then in October last year, we raised $20 million and said, okay, now we've got the money that we need in order to drill it, fix all the holes, hit it, answer all questions. And that's what we're doing right now. So now you ask why us and why no one else? Well, I think it amazingly, it happens a lot. If you look around, it happens all around the world. Majors that own projects like these they operate according to capital budgeting. I'm sure you're familiar with this concept. Basically, BHP says we got $30 million exploration spend per year. Here's our suite of projects, and they allocate like $1 million all around. And then that is just another way of saying it's going to be half-hearted work unless you are high up in the pyramid and you're a priority project. If you're not a priority project, then these projects tend to languish. So with a junior that's got focus, drive comes from me. I love doing this. I've got a network of investors that follow me, and I have the experience and the judge that gives me the judgment to see whether a project like this could work or not. And so I realized it can work. We need to increase the grade a little bit, which obviously lots of more drilling, and then do the technical work and just go through the motions, cross the T's and dot the I's, and that's where the value gets added, and that's what we're doing. Sorry, it's a bit of a woolly answer, but I hope it does answer your question.
No, it does answer my question. And I think the global weighted average grade of copper is 0.45%. That's kind of where you want to get it. But the overall global average is about 0.3. So this is basically, we'll talk about that, but I don't, anyways, we'll talk about grade later on. First of all, I want to talk about the specific business strategy here, though. I mean, you touched upon it briefly just before, and I understand you'd be looking for a transaction, but what is the right time, the right size, or the right counterparty for that transaction?
So I'll tell you that our business strategy you can summarize in 2 words right now. It's right size and optimize, or optimize and right size. I think the right size and optimize. And what falls under that is lots of drilling to improve the grade and make the project bigger and better. A little bit bigger, a little bit bigger, and a little bit better, because it's already quite large, and it's like moving an oil tanker. You can do it incrementally, but you don't jump from the Indian Ocean to the Atlantic in one go. So that's why that's the right size. Improve the grade, make it a bit bigger. The optimize is fix the technical issues that were there historically. There was another thing the previous owner did, which actually resulted in a loss of credibility, is they put out a PEA, which is the currently active PEA on this project, which describes a very large bacterial heap leaching process. Now that is okay in the lab and people talk about it, but it's never been done successfully at large scale. And that's why that PEA had no credibility from the beginning. So when we came in, we said, let's go back to basics. Let's provide answers, not questions. And we said this project must work like most other conventional sulfide porphyry copper projects out there, which is conventional milling and flotation. It means a much higher capex, but it means a much lower technical complexity. So that's a key step, and we've done that. And this project is perfectly amenable to this conventional processing. But in order to deal with the grade, it has to be done at quite large scale. And when I say quite large scale, it's all relative. The scale that we're looking at the moment is around 24 million tons per annum of processing. I think in the global context, it's a medium-sized operation. In the Haib historical context, it's a large-size operation. It's about double of what they looked at previously. In terms of copper production, let me give you that number. We're envisaging something in the region of 80,000 tons of copper equivalent in concentrate. Um, so that's, I would say, a BHP and a Rio Tinto, they are sort of 100,000 tons plus. So we're probably just below that threshold, but certainly like a First Quantum or, a range of Chinese or Asian players would be interested in a project like this from a size perspective. Obviously, I can't talk on behalf of them. And so that's the optimizing part, right size, optimize, get the geology right, make it bigger and better, get the processing right, prove that this project can work, like technically and economically, and then tick all the other boxes: infrastructure, roads, transport, water, power, permitting. Once you've got that, then you've got to use an overused term, then you've created a shovel-ready project. Then it can be built. And then the question is, who's going to build it? Because obviously, one of the implications of what I've just described is big capital. We're talking 1 to 1.5 billion US dollars of capital. So a lot of money for Namibia, a lot of money for a small company like ours. But it's actually quite low for a project of this scale. If you look at the capital intensity compared to some of these other operations, it's low. But it implies that it's very likely that another much bigger entity will end up building this mine, but that's for the future. We're not there yet.
Well, you mentioned there Asian players, and I'm wondering because you're a Canadian listed company and this is copper, so strategic to Canada. We've seen other deals not get through because of Canada. Do you think that might be a problem for you? I mean, if a Chinese group wanted to buy this off of you, could that go through?
Okay, so obviously this is a public forum, so I tend to be very direct, but I need to be a little bit careful. But I will try to be as forthright as I can be. And I'll split my answer up into two. I'll give you my personal views quickly and then how we deal with the situation that you described. So obviously the Canadian authorities want to protect the supply chain for critical minerals, and that's why they've brought in this ICA Investment Canada Act.
Mhm.
I think it's misguided. You know that old expression, the road to hell is paved with good intentions. It's well intentioned, but I don't think it actually does anything to protect the critical metal supply chain, because if Canada wants to have protect that, it should invest more in processing capacity and smelters and refiners, etc. But because of NIMBYism, that doesn't happen. And that refining capacity sits in China. And as you know, China has massive demand. They've basically cornered every critical metal out there except copper. They are weak on the copper side. So there's huge demand from Chinese entities to invest in copper companies. And in addition to that, not only is there big demand to fill their smelters, but also the universe of countries that they can invest in is much reduced. They can't go to the US, they can't go to Canada, and even some places in South America is difficult, but Namibia is it's friendly with everyone. So now how do we position ourselves with regard to this? Obviously, it means that we are actively looking at re-domiciling the company. And some others have done this before us. Basically, it means that you you change the corporate setup of the company in such a way that you would not be subject to the Investment Canada Act anymore. And that's in process. So we're looking at this. Effectively, it means that you re-domicile to another country, and you would remain listed on the TSX. You can remain listed on TSX, but under the Act, there's a definition called operations. If you don't have operations in Canada, like bank account service providers, etc., you would then not be considered Canadian, and then you're not subject to Investment Canada Act. So that's a generic description. That's what we're looking at, and I think in the end, that's what's going to happen. That way, we we then can entertain, we can talk to anyone when the time is right. It's obviously still a few years away because we've still got to do all this right sizing and optimizing and permitting, but we are very conscious of the situation and we're setting the company up such that we are well positioned to deal with this. Sorry, that was a generic answer, but I think you get it.
I think NIMBYism is good for Namibiaism, and although
I like it. I like it.
although I'm not a dad yet, I've got plenty of dad jokes, so you better get used to it. But there's something else that I forgot to ask there at the beginning. Change of control fees. Is that do you have that in the clause? How does that work?
At the moment, we don't have it, but we will have it. And I don't know, I don't want to lecture you on economics, but a change of control payment deals with the agency problem. As a CEO of a company, I need to be incentivized to approve, to consider and support M&A. But if I have a job and a nice paying job, then I would not be incentivized to do so. And that's actually the reason why one has change of control payments. I think they have been much abused. If you ask me what do I think about some of these crazy change of control payments that have happened recently in Canada, I think it's outrageous. It gives capitalism a bad name, and that's why I'm not in favor of that. But we will have reasonable change of control fees in place for key executives and management because it's selling the company, or not selling the company, but doing a strategic transaction eventually is integral to the strategy of the company. And so we just need to make sure that people who are working for us are protected, um, to cater for that event.
Hmm. I like that answer, and that's why I ask it. It is absolutely because of what's happening. It's just recently come onto my radar, really, over the last year, I think, to think more about and talk more about changing control fees because they absolutely get misused and companies get sold for peanuts because of them, even where they shouldn't. So that's why I'm asking, and it'd be interesting to see how you come up with that in the
I
future.
can tell you typically change of control fees, depending on, it's remuneration consultants will tell you this, but reasonable ones are a factor of annual pay. That's it.
Yeah.
But it shouldn't be a percentage of the entire company or so. So those practices are just ridiculous. I think as founders, it could be different, but in this case, we are not founders. We took over this company, we turnaround specialists. So we'll be reasonable. We'll have change of control payments, but they'll be reasonable, I can assure you.
Hmm. How quickly do you think a transaction has to happen, though? And why I'm asking that way is to has to happen is because, again, Haib's license was revoked in June of 2021 by the Ministry of Mines and Energy in Namibia. It was owned by Deep South at the time, I believe. They said they were not moving the project forward quickly enough. I think in 2023 that got resolved and whatnot. They renewed the license, you got it, and so on and so forth. But how quickly do you have to make this plan work in order not to come into troubles with the Namibian government?
Yeah, so there is the law and then there is general practice. The law is very simple. In Namibia, you have a minerals regime is 3 years, 2 years, 2 years. You can do exploration. So you get a license for 3 years initially, then you can extend it twice for 2 years and another 2 years. Most good licenses in Namibia have been extended many times beyond that because what do you do after 7 years? After 7 years, you are subject to ministerial discretion. The minister can decide whether to extend or not. But the practice in Namibia is very well established, and that is if you fulfill your work program and you are active and you're spending money, they will extend it in 2 year chunks typically. Now, the Hype license has been in the same hands for something like 20 years. So it's been extended under ministerial discretion multiple times. At Osino, it was the same situation. The license that we had, we held for 8 years and it got extended without a problem. Generally speaking, our brand, I was talking about our brand earlier, we generally far outperform what we say we will do in terms of work programs. So we're safe. In our case, we've just submitted our renewal. So it's being processed right now. And we do expect that it will be granted for another 2 years. And then we do expect to apply for a mining license very soon, like literally in the next couple of months. And a mining license will then solve this problem because a mining license, once you've applied for a mining license, then no one can be on top of you. It's the highest level of license that you can have. It usually takes 1.5 years or 2 years or whatever. It takes a while to get approved because a mining license is typically subject to environmental and other long lead conditions. But once you've got that application in the system, then you protect it. And but you can only apply for a mining license once you've done sufficient technical work to justify that. And that's happening as we speak. That mining license application will go in the next couple of months.
I was just making a note that that's something we'll definitely get to. So I'll ask you more about permitting later on. Your February financials showed almost 15 million in cash. will that be enough to get the project to that stage where you have that mining license, or where the project is even transactable, or do you expect having to raise again?
We definitely have to raise again in order to continue to execute our programs. Right now, that cash position is correct. We're down to about 12, 13 right now. Depending on how much we do, we can definitely stretch that to the end of the year. But as you know, part of my DNA also is to fast track and to do things properly, etc., and all of that costs money. So I do think that at some stage in the second half of the year or so, we should do another financing. We do have some warrants and options coming in, so it's another $1.5–2 million through warrant exercises that will come in. Um, but yeah, it's so the spending rate is determined by the activity, the rate of activity. So generally speaking, yes, we'll have to finance again at some stage. Obviously, I can't tell you when. It all depends on market conditions and an end. Um, and but to answer your question on the mining license, yes, definitely we will have the mining license application submitted with the funding that we have in place right now. Um, yeah. So I don't know did I answer all your questions or?
Yeah, no, I think you did. And how do you finance it from here on out, though? I mean, are you thinking just um, continue raising money on the equity level? Would you consider a JV or getting in another strategic? How do you think about that?
Yeah, as usual, the puzzle has many pieces, and so we're trying to construct the puzzle carefully and systematically. And the puzzle, obviously, we have different financing options. There are royalty streams, although told you royalties doesn't work. Let's say streaming, let's say alternative financings or equity. I think given the stage that we're at, we should be financing ourselves with equity. It's dilutive, but it doesn't mortgage your future. And I think that's what we will do. But at the same time, having just come out of a 7 year bear market really in gold equities, not gold prices. But like when we did Osino, it was a hard slog all around. Even though the gold price kept going higher, equities, gold companies weren't being financed. You know all about this. Um, and so it's painful sometimes to finance with equity. Obviously, you always want to finance at successively higher prices. But I have also learned that you should not finesse this too much. Don't try to be too clever and don't go too close to the edge of the envelope. So, given all of that, we just try to do our best, finance as high as we can, with as much or on the back of news flow typically. So, that's the generic answer. In our case, the key news flow that's upcoming is obviously drill results, but drill results in itself are just a stepping stone. The real key event is the next technical study that will demonstrate under 43101 rules everything I've told you so far, which is big, big open pit mine, conventional flotation, slightly higher grade, um, and it's technically and economically feasible. That's the game, or
Mhm.
that's the aim. So ideally, it would be great to get such a technical study out, and then finance on the back of that. But that's only later next year. But sorry, late this year. So we've got all these balls in the air, and we're trying to figure out the best way of doing it. At the moment, as I say, there's no particular urgency. But we are in the stages of, we're doing these studies I'm referring to. I've just got to be careful here. Sorry, that's why I sound like I've got my, I sound like I'm jumping around points. I have to be careful because, disclosure, stock exchange rules, etc. But let me summarize it. So we're working on a technical study, and once we've got the results of that, we have to make a determination whether we will publish a PEA first, soon,
Mhm.
or a pre-feasibility study a little bit later. Publicly, we've always said we will publish a pre-feasibility study at the end of this year. Um, but there may be an argument to publish a PEA beforehand to re-benchmark the project, etc. It all depends on how the numbers come out when our study process is far enough advanced. So what I'm really saying is there's a possibility that we may publish a PEA earlier, and defer the pre-fees a little bit later. But I think let me leave that for now. I don't want to get into any trouble in terms of what am I allowed to say, etc. But that's maybe let me answer this generically. Bear with me for 1 minute, and I think you'll get my point. A PEA is by definition, preliminary economic assessment, allows you to use inferred resources and gives you more latitude. So generally, a PEA, the way I see it, is a marketing document. So in a PEA, you want to give your project the best shot. You publish it, and then the investing community sees, okay, this company has reasonable prospects of actually becoming economic, etc. Um, a better study is a pre-feasibility study, but the big difference between a PEA and a pre-feasibility study is that in a PFS, you are not allowed to use inferred resources. So you have to do a lot more drilling to get there.
Yeah.
And also the quality of your estimate is better. So when you talk to corporates and third parties, etc., they generally want to see a pre-feas because they know that with PEAs in the Canadian market, there are always a lot of shenanigans because people are overly optimistic. And so that's why PEAs don't have the same credibility. Um, yeah, so that's what we're grappling with. We would like to, for us, it's very important. The market does not realize how far advanced we are with this project. We're doing so much technical work because of I'll come back to the redomicile, because of the corporate changes that we're contemplating, um, we we haven't really been that good at disseminating information. So we haven't had that many press releases. We haven't had that much news flow because we were contemplating how to establish the company going forward. Obviously, if we were to redomicile, sorry, I'm jumping around. It's going to come back together just now. If we were to redomicile the company, then we would have to pay an exit tax. If our market cap is too high, then that exit tax becomes very, very punitive. For example, that's what happened to Solaris. I can't talk on behalf of them, but they had a six, seven, $800 million market cap. They wanted to redomicile to Switzerland, and then they did it sort of half, and because tax is a major implication. So for us, whilst we've got all these balls in the air, we need to keep the market happy. We need to disclose information. We need to continue with our technical programs, but we also need to set the company up for the future. The end result of that soup is that we've generally we haven't had that many press releases. We haven't promoted that strongly. Um, yeah, that's the situation. And so right now, once we see the results of the studies that we're doing, we will make a determination whether to publish a PEA or go straight to a PFS, which is the current plan. But I think we are going to publish a PEA if subject to all the results coming back the way we expect them to be. Sorry, that sounds like I jumped around this question multiple times again. I hope you understand all the different drivers and all these different balls that one has to keep in the air as a CEO of a public company in a situation like ours.
Well, I can definitely tell you that I don't fully understand, and I think most people don't fully appreciate how difficult that might be. So I'm glad you're walking me through it as thoroughly as you have here. What happens though, Heye, if you can't get there from the perspective of grade? I mean, I know that's something that you might not necessarily want to talk about, but I'm sure that's something you're thinking about, and I'm sure you have to. So what if the grade stays at 0.3 or 0.35% copper equivalent? Does the project still work? And does the business plan that you told me about earlier work as well?
Yeah, so let me just make the disclaimer. Obviously, everything I say is speculative
Yeah.
because under 43-101, I'm highly restricted on what I can talk about grade and so forth, and how I can describe things. So it's all speculative at this stage until we've published a technical report, and that's why it's so important to publish a technical report. But generally speaking, of course, we want to increase the grade because we want to make the project better. But I'm highly certain, given the information I have so far and my good engineering judgment, that this project will work at current copper prices. This project most certainly, our metallurgical test work and everything is showing that this project is technically feasible and it will become economically feasible too, or it is economically feasible. But as you know, we've got different audiences at different points in time. There's the equity market audience, which drives our share price. And then there's the corporate audience, which will eventually look at us as a potential acquisition target or strategic joint venture partner or whatever. On the equity markets, there's generally very short attention span. People don't go into a lot of depth, it's shallow, etc. And that's why optics and signaling, etc. It's very important to pay attention to that. Um, and that pertains to what I was talking about earlier. What kind of technical study, PEA, pre-fees, now, later. Those are all the things we have to grapple with. Let me just deal with the grade because that's what you asked me about. So at the moment, our average grade is 0.35% copper only. I've said publicly, and I still maintain this, We've got three, I've got three arrows in my quiver, three grade arrows. One is to draw more high grades, to basically target higher grade areas that our predecessors identified. So number one. Number two, bring in the byproducts. There's moly and there's gold. Um, and that has never been reflected before. We've only ever reported copper only. So there's a copper equivalent effect. And then number three, improve geological modeling, because for any project, whether it's copper or gold or anything, projects initially get drilled at a wide spacing. And as you go more detailed, as you drill infill, you have more geological knowledge, and it results in constraining, improved constraining. Imagine a sausage. As you squeeze it, it becomes pushed into a smaller volume, you get higher grade.
Mm.
So with these three, with my three arrows, which is higher grade areas through more drilling, byproducts, and better geological modeling, I dreamt up that target that you mentioned, and you're putting me under pressure because we might not get there. That 0.4 to 0.45% would be great. I would love to get there. That's our target. Will we get there? I don't know. I think we'll get into that region. Maybe 0.4, 0.45, maybe a stretch. Very hard to say. We have to execute our drill program, then we'll know. But the crux of the matter, and that's what you asked, is can this project fly at 0.35? Yes, it can. That's our internal modeling, which is obviously still subject to certain assumptions, very clearly shows that this project will have a very significant NPV, positive NPV at these prices. So yes, the project will fly. It's going to become economic without a doubt. And we're busy firming up all the assumptions to do so. But the grade is a major kicker. So the higher we can get it, the better. But grade is it's you can't force it. It's your endowment. It's what the earth created. All you can do is drill it as much as you can, as fast as you can, and then give it your best shot to model it. So yes, I do think we will definitely improve the grade. Will we get to 0.45%? Currently, I think maybe not, but will we get to 0.4 in that area? I hope so, but no guarantees at this stage. But yes, there will be an improvement in grade, and yes, this project will be economic without a doubt.
I know you're not just saying this. Like I know you, based on the answer that you gave me, you've thought about this a lot, and I can also see that there's a few examples that you compare this to some of the widely known tier one deposits like Escondida and Pebble. But if I'm not mistaken, they both. Well, let's just take Escondida because Pebble's not a prediction. We don't know too much about it. But for Escondida, for example, they did have supergene enrichment, and so they had this large chalcocite blanket that was over 1% copper, and that of course gave them a bit of a kick there at the start at the operation, and so did I believe Candelaria and Cerro Verde and so on. Whereas again, Haib is essentially a primary sulfide system that's not being touched or enriched by that secondary wave that pushes your grade up. And again, I'm just kind of summarizing what I've understood so far by looking at the presentation. So correct me if I'm wrong. But so knowing that, and again, building onto what you just told me about upping the grade, what's the best comparison to what you're trying to achieve here?
Yeah, so let me also just another disclaimer. I'm not a copper expert and I'm not a geologist either. I'm a mining engineer and I've got good engineering judgment. And some of the stuff I'm still learning. But high level speaking, you're absolutely correct in what you said. You said it right at the beginning of the presentation. This is a very, very old porphyry, about 2 billion years or so. And that implies that there has been a lot of erosion. That's why Namibia is so beautiful, geologically speaking, because everything's been eroded and is in the open. So that supergene enrichment, if it was there, is mostly gone. So yes, it's mostly sulfite.
Mhm.
Um, and yes, you are right. The Escondidas and these other projects in the world, they had higher grades in the early days that paid for the capital. But remember, also in those days, they had much lower copper prices. I'll give you another example, Palabora, which was a well-known, used to be a Rio Tinto, big copper mine, big open pit. It's now underground block cave. Palabora in the 1990s was operating at 0.3% copper grade, and then it was one of the lowest cost producers in the world. So I'm just saying a 0.3, 0.35% copper mine can work. So in Hype's case, so therefore that's what we have. We don't have that supergene enrichment, but we have some other advantages. We have number one, we're in a great jurisdiction, so we have an ideal location relative to power, water, operating costs. We're in a low currency environment. Altitude, we're not at 4,000 meters, we are at 400 meters. We don't have to desalinate water. We don't have to do any of that. So we've got these operating cost advantages. Of course, the key game changer that brought Hive back into the open, etc., is the change in the copper price. Copper prices are now double or triple what they used to be and are predicted to go higher. And even if they don't go higher, even at current prices, this project will be economic.
Mm.
Um, so that's the backdrop. There's one other thing that we have, which is very interesting. Because of the age of this deposit, generally when you have something that's very old, you have deformation. And there have been a couple of phases of deformation. Deformation is just a clever word for structures, folds, bends, and that has resulted in enrichment for using that word. There are certain domains within Haib that do not look like a classic porphyry that have more orogenic characteristics. Orogeny refers to mountain building, folding, faulting, and these pathways generally are traps for mineralization, whether it's gold or copper. And that is those high grade, those additional, we don't like to call them high grade shoots anymore because they're not really shoots, they're domains, they're areas. We definitely have areas of higher mineralization. And Rio Tinto missed that. It's an old story because they drilled vertically. And whereas these structures are at a preferential certain angle, and so if you drill vertically, you might miss them. So what the previous owners did, and we followed that up, is they drilled inclined holes. So then you hit them. So we've been hitting some very nice higher grades. We continue to hit them. And so that's one of my grade improvement arrows. It's going to be, and yeah, and I think it will improve the grade a little bit, but I'm not banking on it. I think any grade improvement is going to be a bonus. But our base case is to prove this project, to render it economic with all questions answered at current grades. Although I know that the grade will improve somewhat, somewhat.
Well, you bring up a good point actually, because I was wondering if I was thinking about those high grade portions that you're after here, because what is the, maybe talk to me a little bit more about what the thesis is and what controls those domains? Because again, if I understand, it's a porphyry system, so supposedly you have a higher grade center, but because of the, it's almost 2 billion year old age of these rocks, I wondered if the grade zonation and the plumbing behind those high grades portions could have been replaced, or again, kind of even scrambled, if you will, over the years. So maybe talk to me a little bit more about the structural setting
Oh,
here.
yeah. One area where we will add huge value, but unfortunately it's taking time, is understanding exactly what you asked me, because the short answer is we don't know.
Hmm.
What is controlling those things? We have an idea. It is probably related to lithology, which is layers of rock, and structure. I apologize to all the geologists here for me for slaughtering the language. But that geological modeling, that domaining, this stuff that I'm talking about is a lengthy process. So what we initiated, I'm very proud of it, and it's definitely yielding results. We've brought in an international porphyry expert, a guy by the name of Warren Pratt. He's a big fan of Hercules. You might have heard of the Hercules project in Idaho that's getting a lot of attention. And he sees many similarities between Hercules and Hype. Now, what I called in the beginning the pedigreed ownership of the past, Rio Tinto, Teck, various other owners. The downside of that situation is that often you have geological institutional memory might get lost or might not be as well integrated as it should be. And so that's where we now come in and we are fixing that. So we have to go back and we have to relog a lot of core. Some of the core was lost, etc., and historically. So we have to go back and re-establish that geological baseline. We're doing that right now under the guidance of a real porphyry expert, which this project hasn't had for a long time. And then we have to build not just a grade model. The grade model is, obviously just grade comes back from the assay. We have to build a structural and lithological model. I'm talking about a 3, 4, 5 month process. Once we've got that, and that will bring in, for example, breccias, um, uh, potassic alteration, all these clever words that I don't fully understand that drive higher grade that are present at Hype, but that are not well enough understood and that are certainly not well enough reflected in the current ore body model in order to use them as a predictive tool for future
Hmm.
drilling. All of that has to happen. Unfortunately, this is the bad news for investors in the short term, although it's good news in the long term. This stuff takes time. So our drilling has been a lot slower than we expected. We were too optimistic at the beginning of the year. That's because of terrain, very difficult terrain. We don't want to do helicopter drilling because it's crazy expensive. So we got to build roads up there. We have to buy man-portable rigs. There are certain places where it takes us a week to get a drill rig up there, and then it's very slow drilling because we're doing diamond drilling only, no RC drilling because we need all that structural information. So the drilling has been slow, which has had knock-on effects. So slower drilling, slower results, At the same time, now we have to do a lot of this remodeling, this geological process I just spoke to you about. And it just takes time. Now, say all of this with a smile because we're doing all the right things. We are doing, I'm very proud of what we're doing there. We're doing all the right things, crossing the T's, dotting the I's. We're doing this thoroughly, systematically, but unfortunately, it's taking a bit longer. And that means it impacts the timing of our technical reports, et cetera, et cetera. So again, many balls in there. So therefore, yes, you are right. Geological controls have to be better understood. But it's not a quick process. It's not like finance or so where it's a spreadsheet, you punch it in and then you get the answer. These are long lead items like core logging. If we go back, just quickly on that example, having had all these different operators, the core was logged differently with using different codes and different definitions historically. So now we're doing it better, but it means that everything that guys did before us in terms of core logging may not be as valid as we want it to be. So that means we have to go back and relog all that core. I mean, and so we're going to get contract geologists to do that, but it takes time. You can't short circuit these things. But once we do that, that integration of data, bringing it up to scratch, bringing additional eyeballs in, qualified international porphyry experts, it adds huge value. When we're done with that, we'll have a much, much better product, probably end of the third quarter or so, more or less. That's the target, maybe a little bit later, sort of in the second half. And our predictive power for drilling will also be improved then.
Hmm.
Sorry, I'm going very detailed here. I apologize. Long-winded answers.
I think you're breaking it down very nicely for me because I'm just here to pretend to know what these things mean and just ask questions about the alteration package and whatnot and the structural controls. But metallurgy here would also be important, and I'm thinking about that because given that again you don't have the chalcocite blanket for the beginning of the operation, does that mean that your metallurgy might be more challenging off the get go, or what do you
No,
know about
this
metallurgy?
is this is a real beauty of this project. We have the very, very simple metallurgy. And it's already proven actually our predecessors. There was a company called Great Fitzroy Mines and Tech. They did some excellent metallurgical test work, which actually 10 years ago already demonstrated that this project is amenable to conventional flotation. Meaning, flotation basically means you crush it, mill it, and then you float the sulfides and you produce a concentrate, typically between 20 and 30% copper. And that concentrate, let's say 25% copper, typically in our case a bit lower, 21, round about there. And you sell that concentrate. It's much, much simpler. Basically, you just have to crush it, mill it, float it, and then sell the concentrate. It means you have to find a smelter somewhere else. And that's much easier. So the test work that was done historically already demonstrated that this is possible, but there were gaps in it. We've redone that work and we're getting exceptional results. We're getting very high recoveries for this type of process. And there'll be a project update soon that we will publish that will describe all of this. So no fatal flaws in terms of process, also no impurities. We have no arsenic, we have no baddies. And clean concentrates are highly sought after because in the old days, people would process dirty ores. Like in Namibia, there's a smelter that Dundee Precious Metals had that was capable of processing dirty ores. These days, it's a bit different. The Glencores and the big metals traders, they blend the good stuff with the bad stuff, but they need good stuff. Ours will be good stuff. So no impurities, clean concentrate, no issues. And so that's for sure. But on top of that, we are doing optimizations of the flow sheet at the moment to try and optimize this product, which is effectively the same as upgrading the grade by doing things like coarse particle flotation, dense medium separation, pre-concentrations. These are all mechanical processes that you can use, for example, using lasers, using XRF technology, using dense medium. These are all processing techniques that you can use to separate the good stuff from the bad stuff and to reduce the volume of the material that ultimately goes through the processing plant. And those results are all coming in as we speak, and they are generally positive. And they will enhance our process and make it more economic. So that's another area where we're adding huge value at the moment. We have a brilliant head of metallurgy that's managing this highly integrated, multifaceted metallurgical test work program. And then there's a big South African engineering firm called DRA. It's one of the biggest mine builders in the world. They are managing this. They built Kamoa Kakula. Everybody in Canada knows Robert Friedland and Ivanhoe. DRA did all the engineering, design, etc. So they have a lot of copper expertise. And they have a lot of flotation expertise. They're doing a fantastic job executing this metallurgical test work program, which is it's going to be ongoing for the next year or so. We're doing ever more detailed cycles of test work, but already it's clear that this process works. No fatal flaws, easy, high recovery. So great news and scope for optimization.
Well, why I'm asking you that in combination with the previous question about the structural controls, because I'm thinking how predictable the deposit is, or whether there is recoverability, whether there's variability in the recoverabilities across different zones of the deposit. So maybe translating this to my 75 IQ brain here for a second, having undergone these multiple metamorphic events and old rocks and everything, how predictable is this deposit that you're working with here?
Okay, so metallurgically speaking, quite predictable and quite consistent. Yes, there are certain changes here and there, but those can be dealt with on an engineering basis in the processing plant. Something which is new, again, as always, good and bad, is I spoke about my second arrow, grade arrow. My first one was higher grade, second one was byproducts. So the byproducts were never sampled for, and so we see quite a lot of moly. In the current drilling, we're seeing unexpectedly high moly in certain areas. That's good news because it improves your copper equivalent grade. But the bad news is, talks to your predictability, that the moly in many places is not correlated with the copper. So how do you deal with it then?
Mm,
So already our process flow sheet will have a conventional flotation for the copper and then a separate moly recovery circuit. But it may turn out that that moly recovery circuit would have to be run on a batch basis or so because of the non-correlation. So there's definitely complexity. It's not as easy as a gold deposit, but that complexity, there are engineering solutions to it. But like, for example, on the moly, it means that my second arrow might be is definitely a bit blunted because in certain areas there might be moly, but if there's no copper, it may not be feasible to extract it. So, and it's one of the reasons why I'm also dialing back my grade expectations a little bit from that maybe somewhat optimistic 42, what was it, 0.4 to 0.45%.
mhm.
I mean, we're talking like 0.01 percentage. It's tiny, but
Mhm.
still, it's one of the reasons why I'm just being a little bit more cautious on the grade now because it seems like the byproducts aren't going to be as easy as we expected them
Mm.
to be.
What is the correlation there that you explain between the copper and the moly? What does that do to your grade variability?
Um, Sure. Maybe let me not flunk this. There is grade variability. Is it problematic? I don't think so. The issue really is if you look at a borehole and the copper is there and the moly is there, you don't want to throw everything in the process plant. The copper is like 90% of the value. The moly is like 5 to 10% of the value, we thought. Let's say the byproducts have the potential to be up to 10, 15% of overall contained value overall. But now we're dialing that back a bit because we're seeing slightly less gold than we expected, and the gold recoveries also are less than we expected because the gold will just there's not a separate it will just show up in the concentrate. And the moly is in some areas correlated, in other areas non-correlated. So this is a primary copper deposit. And the rest is a bonus, but it's a little bit more complicated to capture that bonus. Maybe simplistically speaking,
Mm.
that's how I should describe it. But the grade variability on the copper side, it's not that variable. It is quite disseminated, although there are higher grade domains, and obviously we're trying to target them. So actually, the grade variability is a good thing. If we can domain some of the higher grade areas out, it's a good thing because
Mm.
it's a way to improve the average grade of those areas.
So is this going to be a one pit operation? Like it's one
One pit.
coherent porphyry that you're dealing with here?
One massive pit, like 600 meters deep, 1.5 kilometers long,
Mm.
800 meters wide or so. It's going to be a big pit,
Mm.
without a doubt. And that's an advantage. There are other companies out there that have similar resource sizes to ours and grades, but these things are patchy in different places. So from a permitting, infrastructure, earth moving, etc. perspective, it's better to have one big pit.
Right. Is there enough space to store waste material? Again, given topography and
Yeah.
everything?
Yeah. There is. I mean, all these studies are happening right now. We're talking. There's a picture in our presentation where you can see it somewhere, and I indicate with the yellow line the location of the pit. It's quite rugged. It's complicated for drilling, But it's, once you start tipping waste, we will fill all the valleys and then build new mountains. I think the one area where it's a slightly complicated is this is I keep talking about the conventional flotation concentrate. At the moment, we are also investigating heap leaching because we have a big additional low grade portion. And the question is how best will we extract that low grade? And at the moment, the idea is to do this with heap leaching, but there might be other options. So that heap leach will require a lot of space, and we've got to move it away a little bit, implies a bit more pumping of slurry. Can all be done, but yeah, so there the topography is a bit of a disadvantage, but we do have on the other side of the property very large flat areas, just that they're a couple of kilometers away. It's not a
Right.
game changer. It's just a bit of an inconvenience, let's say.
I do see, by the way, in some tonnage curves here in the MRE, but no pit shell sensitivity. I suspect that's going to come with the next studies. But what's the expected strip ratio here, and is that something you can improve on as well with the new MRE?
The strip ratio is good. It's low. It's about 1.5, 1.3, I think. But once you introduce ramps, we've only got optimized pits at the moment. We haven't got a mine design. Call it 1.6 in that area. So that's good. The deposit is data limited at depth. So at the moment, and we have to drill deeper. We've drilled some really deep holes or relatively deep holes. But there we're trying to capture the low-hanging fruit first. We've got at the moment there are, if you look at some of the older presentations, there used to be four target areas, one, two, three, and four. And so therefore it used to have four pits if you look at the PEA that's public. That is all going to coalesce into one single large pit. Of course, as you go deeper, stripping probably will go up, but then again, if you find more materials, will it go up? We don't know. I can't give you that answer. But generally speaking, there is an opportunity to grow this by going deeper and improving, increasing the size of the resource. On the other hand, if you look at this goes back to the whole question around PEA, pre-fees, etc. There are so many different metrics how you can value a project, and NPV is only one of them. But one big problem with NPV is discounting. Because of discounting, whatever you have beyond year 10 hardly moves the needle. And that's why extending life of mine isn't actually accretive from an NPV perspective.
Mhm.
But financiers and corporates, if you've got a long life of mine for a big project, you want to have a 20-year life of mine. They like that. And that's why that's again the balls in the air. We're trying to, step one, get a big NPV out so that the market is happy. Step two, as part of step one, into step two, bring out a credible study that answers all questions, not as a PEA, but as a pre-feasibility study. That's what we're doing. And there, drilling more will help. Extending the life of mine helps. But to be honest, right now, the value doesn't come from growing the resource. Right now, the value comes from ticking the boxes, which is prove metallurgy, improve the grade slightly, prove infrastructure, water, power, answer all those questions. Because at the moment, we're a 50 million US dollar market cap company for a project that should have an NPV of around $1 billion.
Hmm.
Therefore, we are grossly undervalued. But it is because people don't know us. People think the project has issues, and there's no credible technical report out there. That's why we've got to re-benchmark this project. That's why it's so important to bring out a PEA that's got good numbers that answers a lot of these questions, and then quickly thereafter follow it up with a credible pre-feasibility study, which the corporates need to get their teeth into.
Yeah. Uh, I'm only an accountant by training, but sometimes I like to believe that I'm a philosopher. So that's why I sometimes say that DCF is the worst way to value a mining operation besides all the other ones. And it's again not the great way, using an MPV, not the best way, or not a great way to value a mining operation or even an ore body, but it's more or less the best we've got, unfortunately. Uh,
And on that, sorry to interrupt you. From a valuation perspective, I also think it's the best we've got, and you're an accountant, so we can discuss this. There's this metric called PNAV, price
yeah,
per NAV.
yeah.
And we've got a slide in the presentation, you can point people to it. And I've done this a couple of times. When you sell, when as you go through the development curve, your PNAV multiple improves. PNAV meaning your market cap effectively, less the debt or plus the debt, which we don't have, divided by the value of your project, or the other way around.
Mhm.
Yeah, market cap divided by NAV. Yes.
Yeah.
So in our case, let's say we've got $1 billion NPV and we've got a 50 million talking US market cap, then we've got a PNAV of 0.05. If I look at our peers in the development space, because obviously you've got to compare apples with apples, other companies that are not producing, that only have a dream. I'd say, sort of, let's say we've got a dream. And they are trading typically at about point two times NAV, which as an accountant, you would think if you've got a credible NPV and a company that hasn't spent the capital yet to build this, to trade at a fifth of that is reasonable, I think. That's 4 times our market value. Um, Once you look at transactions, projects getting sold, like Philo or development stage projects that get sold to corporates, typically that happens at like point 0.5, point 0.6, sometimes point 0.7, not quite, point 0.5. So that's another double from there. That is the essence of the value curve. That's the essence of our business model. How do we evolve along that value curve? And that is obviously by de-risking, answering all the questions, ticking all the boxes, turning the dream into reality. Sorry,
Hmm.
I went off into a preaching tangent. I was just talking about the PNAV multiple and talking about why and is NPV the right metric? At this stage, yes. But as you get closer to production, it's income. It should be more an earnings multiple.
Yeah.
And if you look at Hype on that basis, for example, the numbers are very good. Obviously, at the moment, people would discount it because it's in the future. But the earnings multiples on Hype suggest that this should be or could be a billion-dollar company without a doubt.
Hmm.
But obviously, a lot of things happened before then.
It's EV, so enterprise value to free cash flow that I would typically run if I'm getting closer to production because cash flow is why we're doing this in the first place. I suppose we forget that sometimes. I think. What do you think? Hi, to keep it moving here. What do you think is the biggest challenge in the permitting landscape in Namibia right now? You touched upon it a little bit at the beginning, but maybe we can talk about it a little bit more in depth as to what your permitting process looks like and what do you think the biggest challenge is?
Yeah, so I always say Namibia is perfect, but no country is perfect. Every country is subject to political risk, as we see around the world. In the US, you see what's happened, like with Trump, etc., all the changes that have happened, political risk is everywhere. And political risk exists in Namibia too, and that's why this is a perfect opportunity to sound a slight warning note here, because we've recently had a change of government in Namibia. We've got a new president. She's a very, very well-respected lady, and she has appointed a new Minister of Mines who's made some, let's say, more populist noises around, does the Namibian government have enough ownership, etc. This discussion really comes because Namibia has recently had some major offshore oil discoveries. So there's a big discussion raging in the country around resource nationalism, and that is affecting us too. Um, so therefore, you ask me what's the biggest risk? We will definitely get our mining license. The government is definitely supportive, but the question around there is a risk that the government may introduce a free carry, for example. Like in West Africa, in many other permitting regimes, you've got a free carry. In Namibia, it was never there. Namibia kind of had this unspoken rule that you need to have 5 to 10% owned by local parties, but
Yeah.
funded, not free carried. And on the flip side, Namibia has an well-established tax code, but quite a high corporate tax, 37.5%. Very good depreciation allowances. So it's the Namibia has a fair tax code. So what we're doing right now is talking to the government, um, lobbying, bringing them along, saying, guys, you're getting a fair share of the cake, and don't overreach. So I think in Namibia often, and maybe I'll leave you with this soundbite, the Namibian government in the past sometimes have said the wrong things, but generally speaking, they have a long track record of doing the right things. And I think that will happen here again. So I do think they will do the right things. I don't think that they will be egregious in their demands, and I think this issue will be settled. But it is noise that sometimes upsets the equity markets, and there's always that risk. So I foresee in the short term that's a bit of a risk. From a permitting perspective. Other than that, we have no fatal flaws. Like the environmental permitting is straightforward. It takes time. You've got to go through the motions, but nothing there. And the mining permitting also, we understand the process very well, and it's going to take 1.5 years, and then we're through, and that's beautiful compared to North America or Canada. Where else do you have a where else can you find a project where the permitting process is so predictable?
Hmm. You bring up a good point, though, that things might be changing a little bit. I did see that the president of the Chambers of Mines of Namibia, Zebra Cassette, has just reviewed the mining report from last year, and he's looking to update some of the safety rules around mining, which apparently they date as far back as 1968. So it makes sense to update them, I guess. But so the new rules are expected to come in this year. Do you expect that to change anything for Haib?
No, I think generally speaking, you are right in what you said, but generally speaking, Namibia has very high standards. You can say Namibia's um, environmental and industrial, safety, etc. standards are world class. Like proper mines in Namibia operate according to those same standards you would see in the US or elsewhere. Um, so I think the only potential change, is the one that I just mentioned, is the question of whether the government will formally introduce a free carry. If they do, I expect that they will make adjustments to the tax codes at the same time. So the net effect hopefully will be on balance about the same. Obviously, I can't talk on behalf of the government. The Chamber of Mines is in active discussions with the government about this topic right now. But I'll give you another example, like the royalties. They introduced royalties a few years ago, and everybody got up in arms about it. But then the Chamber of Mines lobbied, and they got them to agree to make the royalties tax deductible. Very few countries in the world where the royalties are tax deductible. That speaks towards the constructive attitude that the regulators in Namibia generally have, and also the good relations between the industry and the government, which continues to be in place. And that's why I'm actually very positive. I think all of this will be resolved. It's going to be fine. It's just that the market sometimes misinterpret these signals.
Hmm.
But as I said in the beginning, nothing is guaranteed. There's always risk. Political risk is always out there.
How sensitive is the topic of water in southern Namibia, both from the community's perspective, but also the government's perspective? Because I think that is a relatively dry region.
Yeah, water is hugely not contentious, but water, Namibia is a desert, semi-desert, and it's water scarce. So water is always an issue. But in the context of mines, it's actually positive because mine development brings infrastructure. And and this infrastructure stays in place even after mines leave. So for example, the uranium mines have brought desalination to Namibia, to the coast. And that's great. We don't need that. We are close to the Orange River. And the Orange River has enough water. It's a river between South Africa
Hmm.
and Namibia, the boundary. It's used for agriculture. It's very, very low population density down there. Obviously, we're going through this permitting process to be allowed to do this. We have some other options. There's a very large dam that's about 250 kilometers away, that's unused at the moment, that we could link into with a pipeline. It's a higher capital option. So we're doing as part of the studies we're doing now, we're doing all these trade-off analyses, how best to get the water to the project. But the short answer is there's enough water there. It's going to cost a little bit of capital, but it's not insurmountable. There's an engineering solution, and we're busy deriving that solution right now.
Would that require cross-border coordination with South Africa, or in terms of permitting on local communities?
Ultimately, yes, because the Orange River has the water is shared between South Africa and Namibia. And so, yes, it would ultimately, but those conversations are already taking place. Like in agriculture, it's the same thing. You got agricultural users on both sides of the river. It depends on the level of infrastructure that we have to build there. We will probably have to construct a concrete weir in order to be able to abstract a certain amount of water. And yes, it will require cross-border permitting. But the permitting regime in South Africa is very similar to Namibia, and that very similar to the US, in fact, in that you have to do an impact assessment, you have to do public consultation, and you have to demonstrate that you can mitigate the impacts, etc., etc. So all of which I think we can easily do. I think that what I understand in the US, what makes it slightly different is it's very difficult to do things on federal land.
Mhm.
You've got these different land stretches. In our case, that's not the case. We only have state land, and so there's one entity that you deal with, and that entity is generally highly supportive. Mining in Namibia is seen by the public and by the regulators. It's seen positively. It's seen as a catalyst for infrastructure investment, etc. So generally supported by the population and by all stakeholders. So we don't
Hmm.
expect any issues.
So what is it that locals ask you then when you talk to them, or when you organize consultations, or what's the main question that they raise?
Jobs, jobs, jobs.
Hmm.
Namibia is a very unequal society. You've got privileged people like myself who are well off, and we live like in Europe or in the US. But the biggest part of the population is unemployed. Namibia has a massive unemployment problem. We've got 40% unemployment in the country. And so it's actually all about socioeconomic upliftment. And how do you achieve that? Through education and jobs. People need jobs, and people need quality jobs. Mining provides quality jobs, provides education, etc. So generally speaking, when we have public meetings, we have huge turnouts and population, and the people say, when can we start? So it's mostly about expectation management. We have to tell people this project will still take a couple of years. It's not going to be a mine yet. It will take 3, 4, 5 years. So take it easy. I think the privileged part of our population, let's say like my family and others, that's like same as in the US and elsewhere. Then you have maybe NIMBYism or special interests, etc. We don't really have that in Namibia because Namibia people tend to be quite patriotic. Even the privileged people want to see the country developed, and they want people. They want all of the population to have access to opportunities, and mining brings that, and that's why mining is definitely seen as a force for positive change. But they do pay attention to sustainability, responsible mining, doing the right things, etc.
Hmm. Does that also include talking about power? I mean, water is one part that's kind of obvious, but how's Namibia from or southern Namibia from the perspective of power, and would you operating there also bring power to the region? How would that work?
No, you're 100% right. Power is the key issue. And that Namibia has a very small local heavy industrial base. Namibia's got agriculture, fishing, tourism, and a bit of mining. And so the total power demand in Namibia is very low. It's about 800 megawatts, the entire country. Compared to South Africa, it's about 40,000 megawatts. So it's like a fraction of South Africa, just to give you a sense. So all of Namibia is probably like a city in the US. Maybe I'm getting my numbers wrong here, but it's small. And whereas Haib will have a maximum power demand of something between 120 to 150 megawatts. So it's going to be like 10 to 15% of the national grid, which is very significant. There's enough power there. There are some very large capacity, high tension substation and power lines close to the project, leading down into South Africa. South Africa obviously has produces a lot of power and supplies Namibia with power. Namibia has diversified away from South Africa, so Namibia has some hydropower, some wind, a lot of solar. Um, and so we are going to tie into that grid. But yeah, so the power is there, but obviously being such a big part of the national grid, it limits our capacity to expand. So I think in terms of size of this project, I think we've got the right size. I spoke about right sizing and optimizing at the beginning. But would we be able to double this project from here? No, I don't think so. There's not enough power. But that's why we're maximizing it with what's there. But I'm comfortable that the supply is there. And also Namibia, and you haven't asked this question, but it will be on the in the back of your mind. South Africa had brownouts and had an unreliable power supply over the last few years. That's coming to an end now. But Namibia has never had that. So Namibia has had a very stable power supply, never had what we call load shedding or brownouts. So very confident that we have sufficient power and reliable power.
It would be 120 megawatts though. So I mean, you would still have to upgrade or invest in infrastructure though.
We have to, there's a substation about 40 kilometers away. So we have to build a power line from that substation. That substation has enough capacity to supply us.
Mhm.
But yes, we would have to build a power line, but it's manageable. It's 40-kilometer power line. Typically, you do it in joint venture with the Namibian Power Utility.
Mm.
We build it, part pay for it, and eventually hand it back to them and they operate it. That's how it works, and it's been many times. It's been done many times before by other operators like B2 Gold, Anglo, and others. It's a
That makes sense.
well-established formula.
Let's jump over to Zambia here, though, maybe even briefly. What have you got planned for this year over there? Completely different story or different part of the Koryx story. What's happening there?
Yeah, just quickly the history. I mean, people sometimes get excited about Zambia. It is exciting, somewhat exciting, but it's a bit player in the overall scheme of things. The Zambian licenses came about because the previous owners of Hype, when they lost the license, they had to create another leg in order to survive. So they secured these licenses, and they are so interesting. The one has had a bit of work done on it. The other one, both of them have had some work done on it, but very limited drilling. They are both in interesting areas, in particular the smaller one called Luanshua. Sorry, I can't pronounce it, Luanshua. That's in the right stratigraphy, it's in the right areas. Um, and so we have an earn-in deal with a Zambian vendor under which we have to perform certain work. So we're going to spend around about $1 million this year in order to upgrade our knowledge. And also the other problem in Zambia is you've got a relatively short field season because there's much more rainfall there. So the field season has just started and it goes up until about probably more or less the end of the year. And then there's too much rain and you can't access it. So therefore, the plan in Zambia, step one, clean up the setup because we had a contract and now we're converting that contract into taking actual ownership in the license. So we're busy with that. Step two, initiate the work program that started with the drone survey, mapping, that kind of regional level work, which will culminate in some drilling later this year. And then the third step of the third part is to try and consolidate with others, try and grow the portfolio, make it bigger, join up with others. We've had some interesting discussions with some of the material players that have looked at it. So maybe we can find somebody that can take on some of that spending commitment. Maybe we can even consider a spin out of those assets sometime in the future. That would be certainly would be my plan because we don't get much value in Koryx for the Zambian assets. And that's why I do think that ultimately, once we've added a bit of value, we should spin them out, and then shareholders will get some additional value and can do with it what they like. So I think that's the longer term plan.
When you say longer term, what's kind of the outlook on that? Is that a 2 to 3 year, 3 to 5 year plan?
No, let's say I would certainly hope that we can do this in the next 12 months. I think
Okay.
I think step one and step two, which was step one was clean up, restructure. Step two is do some technical work ourselves. I think step one is happening right now. Step two is started and will take until the end of the year, and then next year probably more or less.
It's funny how you think differently than other venture CEOs I talk to, because to them, long term is when the metal prices turn or when the market turns, whereas for you, long term is 12 months. So I had to chuckle there.
Maybe, but you've got to. No, long term to me is 2 to 3 years. Medium term is 1 to 2 years. Short term is 6 to 12 months, more
Right.
or less.
That's fair. That's how it should be.
Mm.
How do you go out and tell that story? I don't have too many follow up questions on the Zambian stuff. It's just I'm kind of patiently watching. There a bit of optionality, so that's about it. That's how I have it mentally noted, if you will. How do you go out and tell this story? How do you market the Koryx story? What is your plan? And then again, why I'm asking this is because your latest financials, there's not much of a marketing spend in there. So how do you deal with that?
Yeah, so obviously I told you about the redomicile, the contemplated redomicile, etc., so we have intentionally not been too big on marketing, just to keep things kind of ticking over. But generally speaking, we attend conferences. We do broker roadshows. And we do a bit of unconventional, let's say like this, like new age marketing. I consider it new age. We don't do any pay. We don't do other than yeah. We do paid promotion. We do pay people for featuring us, etc. And that's all okay. But we don't do any major big programs like some of these guys do, like buying programs. And I think the TSX, the V certainly has a bit of a checkered reputation because, especially in the crypto and cannabis days, there was some crazy practices taking place. We don't do any of that. But we must travel more. Personally, I admit this wholeheartedly now. I've gotten a little bit, I don't want to say lazy, but I don't want to travel as much anymore. I told you earlier I don't have to do it anymore. So I do go to the major conferences, but I hired a COO, Trevor Farber, earlier this year. And he is right now at the Canaccord conference in Las Vegas, right now as we speak. He's doing a broker roadshow with Alan Friedman, my business partner in Toronto next week with Haywood. Um, and so we're starting promotion again, conventional promoting the company. And I will continue to travel, but the plan definitely is to elevate Trevor more. Trevor is sorry to digress, but he's a copper expert. He was part of Meterex, which was a successful Southern African copper miner. He built Alphamin, became a billion-dollar company. He's a copper guy, and he has a great personality. He's affable, and he's our operations guy. He's managing everything, but I also want him to get more involved in promotion and marketing so that I don't have to do all of it. So between him and I, we will increase our efforts. So the conferences we do typically is we do BMO in February, that's the BMO Mining and Metals Conference in Florida. We do Canaccord in Las Vegas in May. We do 2 or 3 European conferences in between, like we do Swiss Mining Institute in November. We're looking at 1 or 2 others, and then a few roadshows in between.
Hmm.
That's basically what we do. I tell you, most of what I do, which you guys don't see it, but it's happening, is convincing my friends and family and my network of high net worth individuals in Namibia and Cape Town. Those are very significant shareholders in this company, and they buy those shares and they will hold them until the end. And those are the best shareholders to have. So I actually focus quite a lot on that. What you didn't ask either is we did a listing on the Namibian Stock Exchange a few weeks ago,
Yep.
because we have quite a significant high net worth following in Namibia. So that helps to target those people, and yeah, that's what we do.
Yeah. It was the next question that I have on here because I think that's one of your latest news releases that you had on. But that actually leads me to another question, which is, do you expect to have more news releases? I think you touched upon that as well earlier because you don't seem to news release some of the more marketingy things that other companies might, again, stuff that aren't all that material but are good to know from an optics perspective, like for example that drilling has started or that the number of drills has gone up, stuff like that. So how come you haven't news released that? I suppose is because you said the domicile thing, but do you think you're going to do that more?
You know what? I take it on the chin. To be honest, we've just been too busy. You
Mm,
know, we've got 4 rigs running at the moment. We're going to 8 rigs. The drill pro we've our team has gone from 3 to 60 or so, including sampling assistants, etc. We've hired geologists, technical experts, metallurgical test work. We've been head down, so active, and we just haven't done a great job. We just haven't done a great job at promoting it. We're not cutting ourselves up about that because it's worked it's been acceptable to us in the context of the redomicile, because it's good for us if the share price doesn't run away right now, because otherwise the tax bill will be just so much higher eventually. That's how we've justified it to ourselves. Going forward, we have to get better at press releases. We have to release more drill results. We have to release more metallurgical test work. We have to get technical studies out. So it's happening. So there will be a geological press release and a summary of everything I told you geologically, plus drill results soon. There'll be a project update on metallurgical test work and project progress soon, next couple of weeks. And then there will be a technical report, hopefully a PEA at some stage, or a pre-feas. And I don't want to be drawn on it because of 43-101 issues, but we will, as part of the project update in the next few weeks, next 2 or 3 weeks, we will formally give guidance on PEA versus PFS and timing. And
mm.
that's going to be the big one.
Do you think getting more busy from the perspective of communicating is also going to increase your G&A? I mean, as I mentioned at the beginning, I had about an average of 300 grand a month. Is that where you're targeting it to stay at, or do you want to increase it?
I mean, we will drill more. The GNA won't increase that much more. To be honest, I'll have to go back and look at what we actually include in GNA. But some of it probably shouldn't be GNA. Some of it is Namibian overheads, which is just salaries, paying people,
Mm.
vehicles, offices.
Yeah.
That's necessary expenditure in order to increase your activities. So I think our spending rate will go up because our drilling rate, by the way, that also refers to the press releases. We've just Our drilling has been so much slower than we expected. And we just haven't been able to publish that many drill results because they've been so slow in coming in, but it's ramping up now.
Mm.
Um, yeah. So therefore, yes, our spending rate will go up. Our G&A probably shouldn't go up that much. I think what you haven't said, but what you might be implying, what you might be asking is, there are a lot of companies out there that have high G&A and low activity. That's bad. But I think in our case, I just have to go and deconstruct that G&A and see what's in it, because a lot of our G&A is actually good G&A. It's necessary G&A.
Right.
But the bad G&A that you're thinking about, I don't expect that to increase. Yes, there'll be a bit more traveling, but other than that, no, it's all baked into the numbers already.
Mm. It's a bit of a balance too. I mean, you have a lot of companies that are not as active, but they're over promoting. And then on the other end, you also don't want to be very, very active, but not promoting. So it's a bit of a balance that you have to find in there. And that's what you're explaining to me here. It sounds, hey, I've kept you long enough. What keeps you up at night? Like if you had a magic wand, you could wave it and you could make it go away. What'd you wave it at?
Honestly, nothing. I'm very comfortable. I sleep very well. There are no fatal flaws with this project. There are no major risks. I like to focus on the things that I can control. Most things we can control. We can't control the macro environment, so I don't worry about that. The political risk, I would like that to be settled, and that's a bit of unnecessary noise that's out there at the moment that I think will get settled in the next few months. So
Mhm.
that may be the biggest one. But generally speaking, I sleep very well because I spoke to you about techno-economic feasibility. I know that the work that we're doing is credible, and I know that the corporates that will eventually come and have a look at this project, that they will get that. And that gives me total peace of mind. You know, the market will go up and down, but the ultimate price setter in the end is going to be when we bring in a strategic partner and this project takes on a real life towards construction at that stage. That gives me a lot of confidence.
Again, I've been through most of the questions that I had on here. I'm sure I'm forgetting some stuff though, and people listening should do remind me of it. So hopefully, if we have another conversation in the future, I can ask you those things high here. But what do you think I'm forgetting? What did you come here hoping to talk about that I failed to bring up?
Gee, I've spoken so much, I can't think of anything right now. I actually maybe I'll give you this. It's not quite what you asked for, but I think it's a useful nugget for anyone listening to your show. I learned this years ago on a CFA course. I started doing a CFA. I never finished it. But when looking at any company, junior company or any other company, to me, there are five things. It's the quality of leadership. It's the quality of the asset, which includes the jurisdiction. It's the financial backing of this company. What's the risk of them running out of money? Where's the growth coming from? And what's the valuation? I think on all those metrics, we really stack up very well. And that's why I sleep so well at night.
Hmm. That's a very good soundbite to end it on. So, Heye Daun, thank you so much for investing your time with me today.
Thank you very much.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."